First, Nigeria's borrowing trajectory is coming under renewed scrutiny, with reports that the country has breached its debt ceiling after borrowing significantly above its planned level. The development raises fresh concerns over fiscal sustainability and the government's ability to manage rising debt obligations, particularly at a time when debt servicing continues to put pressure on public finances. Nigeria's 2026 borrowing plan was already revised upwards to 9.2 trillion naira from an earlier projection of 17.89 trillion naira, according to figures reviewed. The increase has intensified debate over the country's borrowing strategy and the need to ensure that borrowed funds are channeled into productive investments that can strengthen revenue and economic growth. Also, former World Bank President David Malpass has warned that Nigeria's use of collateral-backed borrowing could create challenges for future debt restructuring and complicate efforts to restore long-term debt sustainability. In a policy paper, Malpass raised concerns about sovereign borrowing arrangements that used assets or securities as collateral, warning that such structures could limit a country's flexibility during periods of financial stress. His comments come amid growing scrutiny of Nigeria's financing arrangements, including concerns over transparency and the risk associated with complex borrowing structures. The warning adds to broader calls for greater transparency and stronger debt management practices as Nigeria seeks to finance its budget and development priorities. S&P Global is set to acquire a majority stake in Nigerian-based Pan-African credit rating agency Agusto & Co. in a move that could reshape competition in Africa's domestic credit market. The deal would expand S&P Global presence across key African markets, with Agusto operating in Nigeria, Kenya, Rwanda, and Ghana. The transaction is expected to strengthen access to credit information and market intelligence while potentially improving investors' confidence and transparency across the continent's debt market. The deal, which is subject to regulatory approval, is expected to close in the second half of 2026, although financial terms were not disclosed. And finally, the Small and Medium Enterprises Development Agency of Nigeria, SMEDAN, says the country's challenge is increasingly less about availability of startup funding and more about the shortage of businesses that are ready to attract and effectively deploy available capital. The agency says many Nigerian startups still lack the structure, innovation, scalability, and the business models required by investors. SMEDAN is therefore training entrepreneurship facilitators under its Abuja Center for Entrepreneurship project, with a focus on developing innovative, technology-driven, and globally competitive businesses. The agency says sectors including fintech, agriculture, health tech, logistics, mobility, and the creative economy have significant potential to attract investment and create globally competitive Nigerian enterprises.